Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon and our guest today is Jeffrey Halley, an independent market analyst. Welcome to the show, Jeff.
Good to be here, Samantha, as ever.
Okay, let's look at the performance of the Asian stock market today. We have the Japanese Nikkei 225 down 0.51% and the Shanghai Composite up 0.27%. In Hong Kong, the Hang Seng is down 1.41%, as in Australia is down 1.13%. In the South Korea, the Kospi is down 1.33%. In Singapore, the STI is at 0.09%, down 0.09%, and in KLCI, it is down 0.43%. Jeff, what is happening with the markets today? It's all red.
Well, if we take a look at Shanghai, which is the only market in the green today, still more news circulating about potential property market support measures going around the sticks, which has managed to keep it above water. But the rest of it, I think, circles back to some comments made overnight by a Fed governor, which I can touch on in a moment, and rising consumer confidence. And I guess the summation of it all is nerves around the inflation outlook in the United States once again, and thus the Fed's trajectory. Plus, they've gone live with this T+1 settlement procedure today. And I think there's quite a bit of nervousness about whether we're going to see failed trades in both the stock markets and the foreign exchange markets this afternoon. We'll have to wait and see about that one, but I think it's just a case of cautionary outlook at the moment.
Yep, a lot of things are happening. So overnight, the US consumer confidence unexpectedly rose, as you mentioned, and we had two US government bonds auctions where prices sold were higher than expected. How did markets react to this?
Yeah, well, let's just clarify this. Higher than expected, meaning that the yields were higher than expected. Yields and prices move inversely to each other in bond markets. So those two government bond auctions, the yields that the bonds were sold at were higher than expected. With the market nervous about inflation and the Fed, this is just news they didn't need to have. It led to a mixed close on the US stock markets. The Nasdaq closed higher, the S&P was flat, but the Dow Jones fell. With a high consumer confidence number, with edgy markets, they're probably concerned that might flow through to more sticky inflation down the line. Also, Fed Governor Kashkari said that there's no reason why that the Federal Reserve couldn't leave rates on hold for an indefinite amount of time. Plus, we have impending quite significant US data coming up on Friday, personal consumption expenditure. I think it ties into the theme that we've seen with other guests on the show, saying that inflation may be stickier for longer, and thus that may delay the Federal Reserve's rate cutting trajectory.
Let's turn to Australia for a moment here. So Australian inflation data was higher than expected today, rising unexpectedly to 3.6% year on year. So what does this mean for the Australian markets and the outlook of the Australian interest rates? Jeff?
Well, we can see the reaction in the ASX today. It's down 1.1% as I look at the screens now. So that would have played its part. It's a bit of a body blow, I think, for the RBA's rate cutting outlook. Markets had priced in at least one cut in the second half of this year, and that's looking like an increasingly distant likelihood now. And thus, I think this is going to weigh on Australian stock markets. The Aussie dollar hasn't reacted at all, but I think Forex markets are more of a US dollar story at the moment, and the dollar rose overnight. The Australian dollar is holding steady as well, I suspect, due to carry trades such as these Aussie yen trades going through at the moment as well. And I think that also explains why dollar yen is still quite sticky at these high levels as well. So all in all, I think this ties back into that theme of that getting rid of that last bit of post-COVID inflation out of the system is going to take a lot longer and be a lot harder to achieve. And I think this is the theme that we're seeing around the world, and it looks like Australia has been sucked into that vortex as well.
Mm-hmm. Yeah. So oil prices. We also see oil prices rising sharply overnight. What's behind the rally this week?
Yeah, overnight, and I think generally this week, it's been a rise in tensions again in the Middle East, and we all know the stories that are running around behind that tragic outcome. So I think rising Middle East tensions, I do believe that there's been another attack on a commercial ship in the Red Sea by the Houthis in Yemen. And we also have a full OPEC meeting starting, I believe, this Sunday as well. I'm not expecting anything out of that meeting. I don't think it's in the interest of OPEC to tighten prices and supplies when there's clearly stresses in the global economy around the world, and the last thing they need is OPEC doing that. And also, I believe that OPEC Plus will struggle to actually maintain tighter production quotas, even if they brought those in. So I think this combination of all these factors combined with this inflation story that I talked about just earlier in the show is contributed towards this rally in oil prices this week. And I expect they're going to stay firm for the rest of the week, and we'll have to wait and see what OPEC does next week.
Mm-hmm. Okay, Jeff, thanks for speaking to us. But before we end the show today, what's on your radar for your data calendar this week?
We have German inflation this afternoon. Now, nobody's really talking about it, but if that was also to come in higher than expected, that may take some of the edge off the rate cutting outlook for the ECB, and that would also tie into this theme that we've seen going all around the world at the moment of inflation at the end of the cycle being a lot stickier than markets had priced in, and the erosion of that rate cutting optimism. So if we see higher than expected German inflation today, given that the markets are on edge about this theme in general, that could be a negative for European equities. Tomorrow, we've got the New Zealand budget. I think we could see some volatility in the New Zealand dollar tomorrow around this budget, particularly around the promised tax cuts that the new government has made, for which they seem to have no money to pay for them. And if we see some sort of chicanery around unfunded tax cuts, that could be quite a sharp negative for the Kiwi dollar in the short term. And finally, of course, we do have US personal consumption expenditure data out on Friday, and that'll be the highlight of the week. And again, if that comes in higher than expected, we're probably going to see another inflation-feared sell-off in equity markets. So I'm expecting a fairly volatile session on Friday afternoon around those numbers.
All right, Jeff, you covered a lot today. Thanks for speaking to us.
Always a pleasure.
So we've been speaking to Jeffrey Halley, independent market analyst on BizTech Asian Midday Market Watch. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndications partners, TV stations, radio stations, and website. Thanks for tuning in.